Hello, everyone, and welcome back to another episode of Stateside Market Report with Bryant Naylor and Tim Robinson. I'm Tim Robinson. Bryant Naylor's over there. Bryant, how are you?
I'm pretty good, Tim. Beautiful day in Virginia. How's it over in Maryland?
It's not terribly hot yet, which I'm excited about. I every year that I live here, I want to move as soon as it hits June because the humidity. And I didn't sign up to live in Florida. But today's not too bad, so I'm excited about that. No one cares, Bryant.
Good.
Let's talk about real estate. Um, that's a good
That's
segue. No one
that's a
cares. Let's
perfect
talk real
segue.
estate. All right. So, following the format of our new stateside weekly market report with Brian and Tim, this is week 2 of the month. Not really week 2, but week 2 of our current rollout of our new program, let's call it. Last week we talked market updates. We're going to do that at the beginning of every month. The second week we plan to talk about investing tips and tricks and what we're seeing in the market here because we deal with a lot of investors. We are both investors ourselves and we love it. So we want to talk about that and make sure our investors do not feel left out. We're doing one of 4 every month just on investing. So, Brian, let's talk investing. Is anyone investing in Northern Virginia right now?
No, not a whole
And
lot.
back to me in Maryland.
And yeah, not a whole lot. The numbers just aren't making sense in Northern
Don't work.
Virginia. What they do, and if you're looking at more of the appreciation growth, we get better appreciation on the Virginia side. But that said, you're not going to be cash flowing. You're probably going to be underwater a ways on your monthly cash flow for a few years before you start to actually cash flow on this side, just because of the way the numbers are working. Unless you put down a large sum of money, let's say you put down 50% or so on a property, then you're going to be at least breaking even or cash flowing. That is when it's a good idea to invest in the Virginia side. But the houses that you're going to be buying on this side are going to be $300,000. So you're going to need a good chunk of money to get started on this side of the river. So
Yeah. And this, I mean, all these conversations about investing could go on for hours. We're trying to keep it to 8 minutes so people don't fall asleep and or tune out. But the bigger picture is anything cash flows if you put enough down. So it's
okay.
really, your time horizon, what your expectations are, what you're doing it for. Are you in wealth accumulation phase of your investing career, or are you in wealth protection? If you're in wealth protection, Northern Virginia couldn't be better. If you have
Yeah.
money to store somewhere, buy a townhouse in Northern Virginia and rent it indefinitely, you're good. It's going to keep going up at above the rate of inflation, most likely. You're going to get all the tax benefits, all the principal pay down, if you do take out a loan on it that you get with real estate. And you're going to be beating anything you're going to do in, a savings account or a T-bond, even though those are high right now. That's wealth accumulation or wealth preservation. If you're in the wealth accumulation phase, it doesn't necessarily make sense when you have different options in very few parts of DC and in Maryland. So what we're seeing here, there's kind of 3 tiers of investment here in Maryland. One is like the condo in PG County for 90 to $140,000, a little one bed, one bath, 800 to 900 square feet. Depending on where you are, can rent for 12 to $1,500. The second tier is kind of more B plus A class neighborhoods like Columbia and Howard County, some in Germantown, Laurel, Maryland, a couple of these places where you can get a really nice townhouse or condo for 220 to 310. Some parts of Southern Maryland, Waldorf, Indian Head, we did a lot of business down there last year, but the prices have come up significantly. But those things you're going to at least break even cash flow wise. It's going to appreciate at or above the national average. And you are probably going to cash flow a couple bucks.
Is
Sometimes you're
that
going to cash flow a lot more, but they are insanely competitive right now.
yeah?
Um,
Is that if you're putting 20% down, Tim? Is that what you're saying? Like if you put 20% down on a house and
25. We
25,
shifted it to 25. Yeah, last
gotcha.
year we were doing 20, but now that it's up, close to 8% for investment, you cannot cash flow positive at 20% down. You're looking at
Right.
least 25.
Gotcha.
Um,
Something for everybody to keep in mind
yeah,
as
no,
well.
great question. Great question. And again, if you can swing 30, if you can swing 35, your cash flow increases. It's all kind of balance and shots and puts and what are these things that you're going to do to make the numbers work. And it's all based on your strategy. But generally speaking, these things are incredibly competitive. And I think honestly, investors need a place to put their money. Real estate investors, and it's infuriating for me because like we've been looking at these for years now. And everyone's seeing them now. Like everyone knows the neighborhoods where the numbers work. Everyone
Yeah.
snatches them up. Everyone gets in there with cash offers, and it's just getting really, really competitive. We're still winning. We have a few under contract for clients right now, but we had to
Yep.
escalate. We had to waive contingencies, but like as long as you can make it work for the individual investor, it's still a fantastic place to put your money. And you just need a good agent to help you navigate that, because it is honestly, there were times last year where we were the only ones looking at these places, and we could just get in there and snatch them up. That is not the case anymore, because I think investors are really frustrated with the current environment and don't know where to put their money. And they know real estate's a safe asset class, and they are finding these numbers that work, and they're jumping all over it. So the competition is fierce in some of these places, but there are strategies to, I guess that would be one of our other episodes, strategies we can pursue to make a more competitive offer. And we've been doing that, and it's been working. So all that to say, trying to keep this relatively brief, is you
Yeah.
can't it's funny because we do the stateside investor email list, and it's very popular, and people say, why haven't I seen this in 3 months? I'm like, I haven't found any deals. And honestly, the deals that I do have go to active clients, that we don't have enough left over to send out to our buyer list, because our active clients are actively pursuing deals, and when one pops up, they get first dibs.
Goes right. Yep.
And it's just like, I don't have enough to send out right now because they are getting snatched up. But yeah, it's really competitive, but we do still find them. And I started that train of thought to say that when people first get this list, like, I had no idea I could find cash flowing properties in the DC area. I'm like, you can. They're super rare. We call it the stateside 1% club, because 1% of deals, I mean, that's totally made up. Very few deals work.
Yeah,
So
it's going to be less than 1%
it's definitely
for
less than
sure.
1%, because we
Yeah,
look at
yeah.
a lot of
But
deals.
we'll round up.
Yeah, we'll round up. But they work. They work. It is possible. And coming from a guy that invests out of state, because I couldn't find cash flowing deals in DC, it is shocking, because you can still buy $120,000 houses in parts of the country. But here, you can also get a $120,000 condo that cash flows positive in a place that's never going to go down in value, in my opinion.
Mhm.
Um, so yeah, it's fantastic, and they are available. So bottom line, if you want to learn more about this, talk to us. Send us an email, give us a call, get on our investor list when they do start going out again, because they will. We just need to have more deals available, and inventory is short, and they're getting snatched up. But we will again. Um, I'm talking the whole time, dude. What do you got to say?
That's all right. I was gonna say one thing I wrote down here that when you're talking, I thought about was some of the clients that I have that have been trying to find a house. They're overseas right now, or they're getting ready to go overseas, and they want to buy like some kind of a primary residence that they can rent out while they're overseas, so they can move back into it, so they don't kind of get beat out by more inflation and home prices of appreciation over the next 3, 4, 5 years they're out. We're having problems finding them what they want in today's market because it's so competitive. So what we're advising them to do is to talk to us about buying an investment property, putting
Mhm.
that money down
Yep.
on something different, not their dream home, putting it into a townhome in Northern Virginia that is going to appreciate over the next 5 years, and they're going to be positive cash flow because they have enough money to put down to be in the cash flow positive range. And then when they are ready to buy in 5 years, where they can pull that money or 1031 exchange that into another property. So at least they're parking their money somewhere that's very stable, and they're going to, like you said, they're going to get all the benefits of owning real estate property from taxes and appreciation, depreciation, and everything. So
Super
that's
smart.
another thing too. So anybody out there that's listening to this that is kind of on, thinking about buying a house, they're not quite sure yet about buying their dream home or primary home they're going to live in for a long time. If you want to park your cash somewhere, in the real estate right now in Northern Virginia, well, most always is a great place to do it
For sure.
if you want to do something other than like the stock market. So,
Yeah.
anyways, I don't know how long have we been going because
I
we
didn't
need to.
time it that time, so probably 25 minutes.
Yeah,
We
probably.
apologize.
We need to
Actually, we
talk.
don't apologize. This is solid
Yeah.
information. We need to bring it to the people, and we're here to provide value. And not everyone talks about investing in Maryland, DC, and Virginia because it sounds crazy, because it's very expensive. But you can make it work. And again, it's all about your walk of life, your desired outcome, your timeline. It's all about time in the market, not timing the market. I heard on Tanya's podcast the other day, and like that's a tried and true method in real estate. Like, I'll just wait till interest rates comes down. I'll wait till there's more houses available. Like we've been saying for months, that's not happening.
And
Interest
prices have
rates
gone
will come
up.
down, but not now. And
but
like,
yeah, but prices are then going to go up, and
right,
competition is going to get more fierce because oh my
correct,
gosh, like
correct. Interest rates are
like
one variable.
ugh,
Like, don't
it is
you have to
one.
marry the property, don't marry the interest rate. You're gonna refinance. Like this, these are just I have all kinds of cliches, but they're all true, you know, and like yeah, anyways, I'm not gonna go down there because we've already talked too long. Call us. We can talk to you about investing in DC, Maryland, and Virginia. It is possible. We do it every day, and we're happy to help you navigate that road. Thank you for tuning in, folks. I'd like you to share this with some folks and subscribe and give us a review and send us emails, give us a call. We don't do this just to see each other. I see Brian enough. He sees my ugly mug enough. We want to hear from other people. So give us a call. Until next time, I'm Tim Robinson. That is Bryant Naylor. I won't throw it over to him again.
I
Stateside
was waiting
market
for it again.
report.
All right.
I'll throw it to you. Go.
All right. Yeah. See you guys next time. Thanks a lot for tuning in.
Nailed it. Talk to you next week.
Nailed it. Bye.